So one of the things we want to look at when we talk about Europe, for those that have been watching the show, we've been saying that, look, industrial production, manufacturing is slowing. Services, the consumer continues to remain a bit stickier. But the problem that we see that's starting to now take shape is a big ratcheting down and really seeing this tightness on the banking side, which as that money slows, that's going to really impact the ability for not only consumers, but also businesses to get loans. So here, when you look at the Eurozone aggregate, industrial production was expected at negative 2.8, came in at negative 4.1. That's something that we continue to see moving to the downside. Expectations, CEW survey expectations came in at negative 9.4. Again, movements lower. GDP came in fairly flat versus what was expected for Q1. Again, it was just with those were already announced, just saying that there was no adjustments. Trade balance, again, coming in a bit under pressure as employment getting, kind of sitting in the middle. But CPI, I think, is the big piece with CPI year on year, still at 7%, month on month. Still, it was expected to be up 0.7, came up 0.6. Core came in at 5.6%. So again, there's still pressure around inflation, and that's not changing. When you look at Germany on that next slide down, on the next picture down, inflation is still elevated, still positive. Wholesale prices are starting to ease. That's something that should help adjust kind of where some of the CPI is. But survey expectations came in at negative, was expected at negative 5, came in at negative 10.7. Current situation expected at negative 37, came in at negative 34.8. So current situation is a little bit better than estimates, but was worse than April. So again, you're still seeing this pressure point, and a lot of that is driven based on the expectations of inflation and what is happening. So for those that have been following us, especially on the European segment, we've always joked that there was this view of this big, gigantic correction where you're going to get this nice big spike and a collapse. And we were like, that is not physically possible based on the inputs of inflation. And that's why when you look at inflation expectations over the next 12-month period, you can see they've gotten rid of this view of this spike and fade. So if you were to look at 2022 with that big spike, if you looked at older pictures, they'd have a big drop off. And here you're seeing there was no drop off. As we've been saying, it was just going to go sideways with movements higher as the geopolitical got worse, as problems continued on the commodity side, and median inflation expectations over the next 12 months by country remains a problem. It's not going down, which is why the ECB has to keep rates moving up. And one of the things on why we continue to see tightness on credit, tightness on lending, and it's only getting worse. We've talked about the US, Europe is no different, and that's going to continue to cause problems, which will drive Eurozone industrial production further negative, further down, because they're tightening on loans, they're tightening on the consumer, and that's going to limit their ability. And as you can't lend, you can't borrow, you're going to cut CapEx, you're going to cut hiring, you're going to cut R&D, and your expansion is just going to contract further, which is why we think that, again, the IMF is overstating what the economic growth is going to look like. This is a net positive, though. German wholesale price index is now negative. This is something that will bleed through the system, which will help bring inflation down. But there's a lot of different inputs for that and a lot of different things in general. And that's where we continue to see some of these pressure points. And we don't really see these big adjustments to the inflation expectation, which is why rates are going to go up, why banks are going to keep tightening down, and that's going to keep a bigger pressure point in general. So that's what we have for you on Europe. I know it's a fairly short segment. There's not a huge amount of information to talk about at the moment. Hopefully we'll have a bit more next week. And next segment, we're going to talk about Asia.